now. Joining me right now is the founder and chairman of Equity International, billionaire real estate investor, Sam Zell. Sam, it's great to see you.
Great to see you, Maria.
Thank you so much for joining us. Do you worry about these trade issues?
I think that the trade issues are issues that probably should have been brought up a long time ago. These agreements are old, and after 25 years of NAFTA, which had a lot of foreign policy elements to it, adjusting it makes sense. It's hard for me to believe that any resolution here is not going to include both Mexico and Canada.
Right. I mean, Canada is sticking to its guns and basically saying, we can't lose this, we can't lose that. There's certain things that it's not going to move on.
But the one thing they can't lose is NAFTA.
Right. The one thing they can't lose is a deal with America and Mexico, right?
Yep.
Okay. So you think at some point this will take care of itself? It feels like that's what markets think.
I mean, obviously I'm not privy to it, but it feels like it's going to get resolved. I happened to talk to one of the Mexican negotiators last week, who was very enthusiastic about getting it done. So I think that the momentum is in the same direction.
Let me ask you your thoughts on the broad economic story. We've been having a debate this morning, Sam, about, okay, we just saw 2 quarters of 4% plus growth, but there's this narrative that things are going to slow down in the next 2 years. How do you see it?
Well, I think that, everybody's been predicting the 2-year slowdown for about 4 years now. So, and for 4 years, we haven't had, an end to, quote unquote, the longest string of positive scenarios, almost 10 years of a positive environment. I think the question, and I asked the Nobel Prize winner this question about 6 months ago. We've just come through 8 years of subpar growth. The U.S. system is built for, give or take a 3% growth rate. Now that we've had 10 years of less than 2, do you have an end to it, or do you have to have a catch-up before there's an end to it?
Yeah.
I don't know the answer. By the way, the Nobel laureate didn't know the answer either. But I think there's a serious question as to whether the long period of subpar growth is delaying the normal cyclical response.
I mean, do you think just because we're seeing this stability now and, 4% growth and perhaps 3% for the year, that it has to reverse within a couple of years? Just because the Fed is raising interest rates?
The answer is no, it doesn't have to. History says rising interest rates eventually slow down the economy. We're starting from a very low base, so it may delay the impact for quite some time. But generally speaking, I think the economy is doing as well as it has because there's been a change in attitude in Washington. Somebody described it to me the other day. They're in a heavily regulated industry, and prior to the 2016 election, every discussion with the regulator was how much the punishment should be. And today, the conversation with the regulator is how do we avoid a punishment?
Yeah. Right.
That's a huge, huge change of circumstances.
It's also a change of circumstances when you look at business managers were sitting on capital for so long. They were sitting on cash, unwilling to put it to work, and now they're actually putting it in deals and in IT and R&D. You've been a seller of commercial real estate. You've been telling us this now for a couple of times when you've been on the show. You're still a seller. I'm
still a seller.
Why? Tell us what you see happening in commercial real estate right now.
Well, I think that to begin with, we're experiencing supply. I mean, we came out of the, quote, Great Recession with no commercial real estate activity. We've never quite had that before. We had a 3 or 4 year period where there was no supply added. And then everybody kind of said, well, maybe supply is okay. And they're building Hudson Yards, and they're building San Francisco, and they're, adding 500,000 multifamily units in 2017. So I think we're about to see the impact of supply, and to some extent we've seen it already in the multi-housing area, like in New York. The growth rate has gone from, rents have gone from maybe +5 to +1. And there's a lot of concessions and weakness in the markets.
How would you characterize residential real estate right now? Prices are going to come down there too?
I think it very much depends on where. I mean, I don't understand these super expensive apartments in New York. I've always felt that that was a way of hiding money, not owning real estate. On the other side of the coin, we're seeing starter housing not selling. Now, to a large extent, it's because, at least in theory, people can't afford it. But people have got, student debt and other things that are impairing them from taking advantage of starter housing. So we'll see how that works out. But I think the magic, as far as real estate's concerned, right now is supply.
And yet you've been a buyer of things like what? Logistics, waste, energy. Tell me about energy and where you think the opportunities are right now.
Well, I mean, we're involved in a lot of different places. We're involved in fracking in the Bakken. We're involved in logistics in the Permian. We're involved in the STACK, buying up old, depleted wells. We're building a company called PAR Energy, which is a refinery company, and we're buying refineries at material discounts, huge discounts to what it would cost to replace them. That's been a formula that generally has worked in real estate and any other kind of heavy assets. Yeah.
I mean, tapping into the energy potential was a good idea because that's not just a job creator, but it's an economic growth stimulant.
Yeah, but remember that the response to this opportunity has in the past been to allocate enormous amounts of capital to it without much discipline. The thing that's separating 18 from 16 is the fact that there's real discipline in the oil patch today that there wasn't 2 years ago.
How about the stock market, Sam? Where do you see that? Is that overvalued in your view still?
Well, when you use the word stock market, right. What is the stock market? Is the stock market the seven FANG stocks, which are
how about that? How about
which are trading at? I think my own judgment was to do a little mathematics. If you take a company trading at 125 times earnings, that means in 5 years it has to be 25% of the U.S. economy. As good as those companies are, ain't none of them going to be 25% of the U.S. economy. So, and by the way, the last time, I did that calculation was 1997, and the company was Cisco.
Wow.
And
we know what happened to Cisco.
And we know what happened to Cisco. And I'm not portraying, gloom and doom. I'm just saying that 125 times earnings means that you're willing to accept a return of significantly less than 1% for your investment. Maybe there are people out there who think that's terrific, not me.
Great analysis, Sam. It's great to see you. Thanks so much.
Great to see you, Maria. My pleasure.
Sam Zell joining us.